Hello, we're from James Cooper Creston, a firm of chartered accountants that specialise in assisting their clients with their R&D tax relief claims. There's been a lot of change in the R&D tax relief world of late, both with introductions in Finance Act 23 and now Finance Act 2024. In this video update, we're going to do two things. First of all, give you a refresher on what's gone before and what's going to carry on into the future, as well as look at what happens next. Next slide, please. So in this first one, which we've called part one, we'll just give you a quick update on the current rules. Then in part two,
we'll have a look at the timeline for recent changes and then the key rule changes that you need to be aware of.
But the most important thing to understand is there is an awful lot going on in the R&D tax relief world. These video updates are merely meant to be pointers for you to become aware of things you might need to think about in your respective companies. So first of all, let's look at the basics. And none of this is going to change, but these are key fundamental principles of R&D tax relief. So the first thing is, am I chargeable to corporation tax, which basically means UK companies? If so, have I got qualifying projects? And we'll drill down on that in a moment. If I've got qualifying projects, have I got the right type of expenditure for those projects? And that means expenditure in my accounts. And then at the moment, we've got two R&D schemes that we can go into, assuming we satisfy those conditions. At the moment, there are two, but it is going to go down to one scheme with the new rules. And what we're going to do in this brief refresher is look at qualifying projects and a bit on qualifying expenditure. Next slide, please. So as I say, at the moment, there are two schemes. And this is just to remind you, there's the SME scheme for small and medium-sized enterprises, and we've got there what the limits are. If you're not in the SME scheme rules, you're under what's called the large or the RDEC, R&D expenditure credits rules, and we'll drill down on those in a minute. The key thing to remember with the SME scheme is not just the limits applying to your own company, but you've got to look above at share ownership, and it can get quite complex. There is a 2-year deadline for claiming under the schemes currently, which is 2 years after the end of the accounting period year end. However, there is a slight subtle change, which Tracy will just tell us about.
So we just need to watch out for rule changes for accounting periods beginning on or after the 1st of April 2023, where companies must notify in advance within 6 months of their accounting period end if they want to make an R&D claim where it is a new claim, or within 3 years if there is a gap of 3 years, there's notification requirements there as well. So we'll cover that off in a little bit more detail later.
Next slide, please. So now just to quickly refresh on what currently you can benefit from in terms of the R&D tax relief schemes. Under the SME scheme, before the 1st of April 2023, you could have an uplift of 130% of your qualifying expenditure, which effectively meant a saving of just shy of 2,500 for every 10,000 of spend in a qualifying profitable company. If you were loss-making, you could surrender it at a rate of 14.5%, which as a rule of thumb gave you back a third. So about 3,300 for every 10,000 of qualifying expenditure. Sadly, those rates have gone down for expenditure from 1st of April 23, and the uplift has gone down to 86%. So the details there of the rates you would now expect to achieve. In addition, if you're loss-making, you only get a surrender rate of 10%. So that takes you down to round about a 6 as a rule of thumb of your qualifying expenditure. So the SME scheme rates have gone down. And for loss-making R&D intensive schemes, they relax the rules slightly such that the surrender rate goes back up to 14.5%. So you still only get the 86% uplift, but these companies will get 14.5%. And what's the definition of an R&D intensive SME? It's 40% of your R&D, of your total expenditure is on qualifying R&D. And they've even reduced that with the next Finance Act down to 30%.
Next slide, please. And just a quick look at the RDEC scheme, which is applicable to large companies or where your R&D expenditure is subsidised Unlike the SME scheme, the taxable credit has got better over the years. You can see currently is that 20%. The RDEC scheme actually is the basis for the new merged scheme, which we'll cover a little bit in part 2. Next slide, please. So the R&D tax relief overview here, as you can see, the credit arising from the RDEC claim is above the line. That means that it will be in your profit and loss account shown as other income, and as I say, is taxable. And you can see there we've just put some information around how that will show in your financial statements.
Next slide, please. So we're now getting to the meat of what actually qualifies for your claim. And these are all about the qualifying projects. And these are really important points, and this is not changing. I've written the source there, which is the guidelines on the meaning of R&D for tax purposes. And this is the DNA of what is a qualifying project, and it does not change. So these rules have always applied since 2010, and they are continuing to apply. And what we've done here is to really highlight in summary the rules, which go to several pages, but this is the most important summary, which is R&D is a project, and that's defined in the guidelines, which seek to achieve an advance in science or technology. So it's really important you frame all your R&D in the form of projects. It then says what a project is, a number of activities to a plan so you can achieve the advance in science or technology. And these are activities which directly contribute to achieving the advance. And the key phrase here is the resolution of scientific or technological uncertainty. And this is something that HMRC pick up on in their checks. In addition to direct activities, there are certain qualifying indirect activities to support the R&D projects. And as a tip there, things where it's gone wrong still qualify for R&D tax relief. Next slide, please. So here's a few things on this list where it is definitely not R&D. So R&D tax relief is all about your advance in science or technology and resolving that technological uncertainty. So it's not the commercial, marketing, production line costs that you have. You will need to exclude those from your claim. Next slide, please. One thing that there is emphasis on in the guidelines, and indeed HMRC check-up on this, is the boundaries of R&D, because the view is that projects have beginning, middles and ends. And things that happen before the project has begun is probably not qualifying R&D. So it's when you start to think about how do I advance the science and technology through the resolution of the technological uncertainty. And it ends when you've got to the end of that uncertainty. We've resolved the uncertainty. We think that we've got the advance. And I've listed there what the actual definition is. So key things to think about your boundary. The next few slides, next slide please, are the references to the competent professional. And this is a very important person. This is the person that is the expert. This is the person who says, what is the technological uncertainty? Why is it difficult? Why is it not obvious to us as the experts in the field? And HMRC have been quiet for several years on what the definition of a competent professional is. There was no reference in the guidelines. There is something of their view in the HMRC manual. And recently, this thing called the Guidance for Compliance 3, which is additional guidance for companies making an R&D tax relief claim, goes into quite a lot of detail about the definition of a competent professional, or what HMRC's view of a competent professional is. And they are saying they are the people that judge what the science or technological advance is and the scientific uncertainty is. So the company should always identify who are their competent professionals, be they employees or external advisors. The next slide lists some of the things that might be evidence that you want to keep a support as to why the person that you've outlined is the competent professional. Thank you. Next slide.
So we thought we'd just have a refresher on the current qualifying costs. As you can see, we've listed there the SME scheme and RDEC scheme costs. To highlight the highlighted costs that we're going to cover in part 2 are going to be the changes around what the definition of software is, that's being expanded, changes to subcontracted activity and externally provided worker costs, where HMRC are bringing those costs back to the UK related R&D with some exceptions. As I say, we will cover those in part 2 of our videos. Next slide, please.
So a little bit of anti-avoidance legislation, which will continue on into the new scheme. It's basically putting a cap on any refunds. At the current time, it's refunds to only SMEs, and it's capped at 3 times the total PAYE NIC bill of the company, plus a de minimis of £20,000, as it says there at the bottom. The cap will apply except in circumstances where you satisfy these 2 hallmarks, and the 2 hallmarks are that you actively manage your IP, your intellectual property, so developed probably from your R&D, and that has to be an employee or employee director, and that you don't subcontract out to a connected company, a fellow group company, or your parent, so less than 15%. Satisfy those conditions and the cap doesn't apply. But it is anti-avoidance carrying on into the new regime. Next slide, please. Last couple of slides, just useful reference for you. This is useful sources of information if you're compiling an R&D tax relief claim. We're governed by the Corporation Taxes Act 2009, Schedule 13. It has both the old SME scheme and now the new merged scheme. There's a few bits of case law where things have gone to the court. The guidelines, which say BIS guidelines there, but it's actually now the Department of Science and Innovation and Technology. The DISIC guidelines are the same guidelines that have run through all the name changes of the departments. They give you the definitive source on the meaning of R&D. Lots of guidance in the HMRC manuals from the HMRC's viewpoint, and they recently issued the Guidance of Compliance 3. Next slide. And just to finish, again for reference, but maybe if you're looking at a claim, just see some of the common errors that HMRC in their guidance, CIRD 80540, see the common things that they pick up on when they're reviewing R&D tax relief claims. And that is the end of our whistle-stop overview. Hope you've enjoyed it. Our details are on the slide. We will shortly prepare another video in terms of the follow-up of the new rules. Thank you.
Thank you.